Hi, I'm Katerina Pontero with National Underwriter Property and Casualty. Here are the top stories on PC360.com for the week of August 20th to August 24th. A week after the NFL sued 36 insurance companies, several subsidiaries of Travelers sued the NFL and a host of other insurers, seeking to avoid paying to defend the league against a wave of brain injury-related claims by thousands of former players and their families. According to the Travelers lawsuit, the company provided liability coverage for NFL properties, the league's merchandising arm, but not the NFL, and should not be required to pay for a joint defense. The insurer points out that a master complaint filed jointly by some 2,000 former players in June alleges 14 counts against the league, but only 2 against NFL properties. In response to the 2011 Joplin tornado, the Missouri Department of Insurance adopted new regulations last week that require farm mutual companies to, quote, carry enough reinsurance that future losses would not deplete its surplus by more than 20% in 1 year, end quote. Rural Missourians obtain their coverage from the state's farm mutual companies if it is difficult for them to obtain coverage from traditional property and casualty insurers. John Huff, director of the Missouri Department of Insurance, said, quote, this new requirement prevents farm mutuals from taking on more risk than they can handle. That protects their customers, end quote. Progressive went through a public relations nightmare last week after a blog accused the insurer of defending the writer's sister's killer. Matt Fisher outlined his outrage over Progressive in a post that began a flurry of posts to social media sites from people claiming they canceled or plan to cancel their policies with Progressive. Katie Fisher, Matt's younger sister, died in an auto wreck in Baltimore in 2010. Conflicting reports over whether Katie ran a red light or not led to the family suing the other driver for negligence in order to get Progressive to pay. In an email to PC360, Progressive spokesman Jeff Seibel says the conflicting accounts led to a jury trial where the company shared the same side of the courtroom with Nationwide, who insured the other driver, as defendants. A jury concluded the other driver was at fault and, according to Seibel, quote, an agreement has been reached with the Fisher family to settle the claim, end quote. A report from Standard & Poor's says insured crop losses caused by the worst drought since 1988 could cost insurers and reinsurers more than $5 billion. The rating service says crop insurers, quote, will see some of the worst underwriting results on their books, end quote, in 24 years. But the losses will be manageable because of, quote, loss sharing from the U.S. government and diversification with other lines of business, end quote. The loss estimate is almost double a $2.8 billion estimate from Milliman earlier this month, which also noted that insurers had paid out $822 million by early August.